if you look at this island map, so Marilyn bring out the OCR, RCR, and CCR. Alright, welcome back to Nuggets on the Go Season 3, Episode 2. We're right now in 2023, and we're going to talk about Part 2 of where we left off on Episode 1. So if you have not watched Episode 1, do head back to click on this link, and that will bring you to the onset of our discussion on 2023 property crash or shift. So for today's episode, we're going to talk about 7 property trends that we think might evolve right now in the year 2023. Let's go. So for part 2, I'm going to dive straight into some of the key highlights of property news that has sprouted out over the last 2 to 3 months. So let's have a look at this very first news, which is talking about the rental rate in terms of volume that happened in December. And later we're going to talk about one of the trending, because this is a hot topic for this year because rental rates has burst through the roof. And of course that has been favorable for landlords, but disfavorable for tenants. And we're going to talk about what will be the likely trending in the next 12 to 24 months. Will rental rates continue to rise in conjunction with what's going to happen now? And that will then bring us to this first trend that we want to discuss in this episode. So 7 trends that might happen in 2023 in our private residential property market. So take note that for today's focus, we'll talk about private residential property market, and we'll focus more on condos and apartments. We will not talk about HDB apartments. We'll not talk about HDB properties today. We will not talk about landed residential today. So trend number 1 is that there will be plus minus about 26 different properties in terms of condos and apartments that will hit their completion date this year. That means, in short, is that they will receive their temporary occupation permit. We call it the TOP date. So there will be likely about plus minus 26 projects that will TOP this year. And what might happen is that some of these owners that have bought into these properties about 3 years ago, because take note that some of these properties being launched in the 2020 season, and of course some properties have a little bit of delayed completion because of COVID period. So a lot of all these owners actually bought into the properties around 2019 and then 2020, and now it has TOP. And naturally, all these owners, most of them, if they're not buying the balance inventory, say last year or the year before, most of them to a certain extent, and I would say that it's a very high percentage, they have already completed their 3 years seller stamp duty. So what will happen is that if they were to put this property in the market, they will definitely ask for high prices. And high prices in this context is that they will not ask for the same price that they bought into last time. So for example, if you look at Sterling residences, on average, everybody bought into the property at about $1,600 to $1,800 per square foot. It TOP'd just a couple of months ago, and now everybody is asking at this current pricing. And then this is what I deem as they will ask for high prices, in the sense that they will ask for a higher price than what they have entered in the past. So how much are Sterling residences owner asking for? And now they're asking for between $2,200 plus all the way to $2,500 per square foot. And that is what I categorize as high prices, in the sense that they will definitely ask for higher prices than the PSF that they entered, because it doesn't make sense for them to sell back at $1,700, $1,800 per square foot, or even at $2,000 per square foot. A lot of owners are finding that it doesn't make sense for them to exit. They might as well just rent it out, or they might just continue to live in this brand new beautiful property that's just completed, and they've waited for so long within the last 3 years. This is trend number 1. It means that if you're hunting for a property in the market, you don't want to go for new launches, you don't want to go for resale, you want to go for this hybrid category, which is what we call TOP projects, because these properties are fresh out of the oven. They have just been completed. Nobody lived in them before. They're brand new. It's just that you will be the second owner, because you're buying for the first owner that have waited for 3 years. You will definitely need to pay for the TOP prices, because this is in exchange for the time and opportunity cost that the first owner has waited beforehand. This is the trend number 1, is that there will be around 26 projects that will hit the market. This is a fresh level of inventory that's available for buyers to choose from. And naturally, the owners that have bought in the past, because they have bought in the previous benchmark pricing of new launches, they are not going to sell back at those kind of pricing. They will ask for this new range of price, which will all be in the 2,000 plus PSF range for RCR projects. And if you want to have a look at this article, there's this very nice article that came out on Property Guru. So I'll attach the link right below for you as well. And if you were to look at this chart, that will also give you an indication of roughly how many units will TOP in the year 2024. Because if you look at 2023, this entire chart talks about the number of condos and ECs that will be completed on a year-to-year basis. And of course, don't be deceived by this graph line. And why do I say that there's no need to be deceived? Because this is not the price index. This is basically the number of condos and EC that will be completed. So when you look at this 2 years has one of the most numbers of properties that will be completed in terms of the number of projects that will TOP. And what does this mean is that there's going to be a fresh supply hitting the resale market. This means that buyers can have a little bit more choices to look at TOP projects, but provided you're comfortable to go for the pricing. But these are also home buyers that want to buy properties that nobody has lived in before. So with that will bring us to trend number 2. Because maybe a lot of you are asking, what is going to happen to the high exorbitant rental rates that has happened over the past 12 months? Right now, rental rates are extremely crazy. And of course, it's good for landlords because your rental use is going to be high. But landlords are also battling with higher mortgage interest rates, right? If they happen to have just refinanced, they will have to refinance at maybe 4% for the next 1 year or 2 years. And of course, a lot of tenants are asking, will rental rates continue to be this high for the next 24 months? Based on this too, there's likely going to be about 30,000 units hitting the resale market because these are properties that will TOP, and that might mean that rental rates will come down in 2024. So I don't think it will happen in 2023. I think it will start to happen in 2024, but I don't think it will drop below previous baseline. That means we will be at a new range of rental rates, but it will taper off to a more stable level in the sense that it will be slightly easier for tenants to look for private residential condo rentals. But also have to factor in that this new TOP projects will also have a high percentage of owners moving into the projects because they've waited for 3 years. They actually bought these properties for own stay and they might want to move in and live in those properties. But there will be a category, for example, maybe 1 or 2 beders that will purchase for investment, and these homeowners that are bought into new launches in this category might want to rent it out. That might also mean that existing owners that are currently renting while waiting for these projects to hit TOP will then end their leases once it expires. Maybe they have signed a 1, 2 or 3 years lease, and once it ends, they will then collect their keys, move into these properties after they've renovated, and those units that they were occupying previously will then be available. So in combination, people who have been renting for 1 to 2 or 3 years moving into their TOP projects, these units will then be freed up in the market to satisfy a little bit more rental demand. TOP projects over 2022, 2023 will also have a little bit more fresh supply in terms of rental, will then satisfy a little bit more demand. And thus, we think that in totality, rental rates will start to taper off to a more stable level, but I don't think it will drop drastically. I just think that it will be a little bit more affordable. Trend number 3 is that this is the year of new launches. Now, just have a look at this graph again. This graph tells us the appetite of developers. That was why in 2021 and 2022, you saw en bloc happening. You saw more aggressive bidding for land. And that is why in the first half of 2023, government has released a little bit more government land sales to satisfy the demand, because our government cannot allow excessive bidding for lower supply of land because that would then jack up the price of GRS too much. So they have to come in with more land to satisfy the demand of developers. And a lot of these projects that were bidded over 2021 and 2022 is going to be launched in this and next year. And of course, developers have 5 years to complete selling their properties before they are taxed with ABSD. And thus, these 2 years is considered the year of the new launches. So take a look at this article from HProp, is that there's approximately plus minus about 40 over projects that will be launched likely this year. And I think it's a very exciting year because if you are somebody that loves to buy new launches, you're going to have a lot more choices to choose from. However, we also need to move to trend number 4, is that new launches is in a new 5-year season, and we have to get used to the new launch benchmark pricing. And what is this 5-year season? So we talk about this during the early part of 2022. I released an episode to share with our audience to go and buy up all the balanced inventory of the balanced stock of new launches that was launched pre-2022. If you have seen the episode, you would then understand what I was talking about previously, because in my opinion, at the start of 2022, just about 12 months back, I shared that all these balanced units will be cleared off very, very soon. And the rationale was because back then, last year in 2022 and the previous year in 2021, we were at the starting phase of this new 5-year season. There seems to be this 5 years kind of movement, in my own opinion, and every 5 years, this cycle pushed up the new launch PSF pricing by about $400 to $500 per square foot. That is, of course, a combination of reasons. And one of the reasons is because developers tend to have a little bit more cash on hand when you see seasons like this, in the sense that they're going to hand over a lot of the projects that are going to complete, and thus they have more buying power and they become more hungry to bid up new land. Developers, of course, have to keep bidding for land and to create new products for the market, and they cannot just don't bid for land. And thus, whenever you see trending like this going upwards, it shows that developers are going to complete most of the projects, and when a project is being completed, developers will call for progressive payment towards the last stage, and that means that they have more buffer within their cash holdings, and then they will then bid for more land in anticipation of their land bank depleting. So coming back to trend number 4 before I sidetrack even further, this 5 years trending tells us that there is a movement, possibly based on a lot of underlying factors like developers' appetite to bid for new land, and because land cost is always increasing year on year, and with inflation, construction costs, there's going to be more cost price into the government land sales, as well as the final bidding price plus the final output of PSF that will be translated into the actual new launch pricing for consumers. This shows us where we are at right now. So for 2023, we are in this price bracket, and we have, unfortunately, to get used to this new level. And of course, just have a look at the last transacted pricing, and Lantor Modern has done very well. We are at this level. So RCR is at a range of 2.2 to 2.8. OCR is at 1.8 to 2.2, or maybe even slightly higher towards the end of the year. CCR is between 2.6 all the way towards 3.5, or maybe even 3.6 and 3.8 in future. And we have already moved past this pricing from 2015 to 2020, and we have to get used to the fact that right now, when you look at new launches, it's all at this level. Sooner or later, everything is above $2,000 per square foot, and then $2,500 per square foot. We have to get used to it because Singapore is right now a global city. There's a lot of liquidity flooding into the market from foreign investors because we are seen as a safe haven. Based on what is happening in the ASEAN region, a lot of people favor Singapore. This is an entire deck of 2023 upcoming new launch pricing with an estimated launch price, estimated break-even price, and we also inputted the land PPR PSF right here as well. So there's 3 color codings, and this has been faithfully done by our PLB research team, and this is made available. If you're watching this episode, you just need to click on the link right down below. Also, if you like what we are doing in terms of our work in real estate, give us a thumbs up on this video, as well as leave us a comment to encourage us, or maybe to give us improvement to improve as well, and or to just type in some of the key topics that you want to hear for the rest of 2023, and I'll do my best to create the content in order to share and discuss here with you. And of course, do remember to subscribe to our YouTube channel if you have not done so. Now, just click on the link down below. You'll be brought to a page where you just need to key in your name and email address, and then you will be able to download this in high resolution just for your own reference in case you are hunting for a new launch in the market. Now, trend number 5 is that properties that are 3 or 4 bidders that are below $2 million in the resale market, I believe they will be snapped up very, very quickly for the rest of 2023. And why is that so? Is because if you were to look at the new launch average transacted pricing for 2022, OCR is at 1,893 per square foot on average in terms of median PSF transacted. We're talking about transacted for the last 12 months. RCR is at 2,336 PSF. CCR is at 2,876 PSF. However, when you look at resale, OCR new launches was averagely done at 1,800 plus per square foot, but OCR resale was averagely done at about 1,003 plus per square foot. So there's a disparity of close to about $500 here. RCR averagely done at about 2,300 plus. Resale RCR 1,600 plus. Another $600 to $700 disparity in between. CCR averagely done at about $2,800 for new launch. Resale averagely done at about $2,180 per square foot. Averagely $600 to $700 disparity. This disparity will translate in a heavier fashion in the OCR market, in my perspective. The rationale is because in the OCR market, in this island map, OCR is out of central region. It also has the largest population of HDB housing estates, and that means that it has the largest population of HDB upgrading families. And HDB upgrading families that are aspiring to move from their HDB properties that has made them a positive return into the private residential market. They will have a very high demand for at least a 3-bedroom or 4-bedroom or even bigger than a 4-bedder like a penthouse. So what I forecast, in my personal opinion, of course, when you watch our Nuggets on Go, we always put this disclaimer at the top bar here, just to share with you that property investment is a huge investment. Do talk to your consultant. Of course, you can come to PropertyLimBrothers and have a consult session with us as well. Just click on the link right here to key in your name for a consult session, and our team will contact you soon for a non-obligation consult session to strategize your property portfolio and also to give you advice on purchase and sale as well. So coming back is that this disparity is going to create a demand in the OCR market for 3 and 4 beders. So anything that is below 2 million will be heavily demanded over the next 12 to 18 months. And we think that this category of properties are going to move very fast and are going to happen. And what is the likely outlook in 18 months time is that when you search on the property portals, you might find that it's increasingly difficult to find properties below $2 million in OCR below, and that is 3 and 4 beders. This is something that might happen. And trend number 6 is that if Fed in US does reduce interest rates in 2024, what do you think will happen to our property prices in 2024? And of course, if you look at some of the trending, some of the projections and news as well, very likely a lot of analysts are forecasting that Fed is going to bring down the interest rate during 2024 season and 2025 season. And if that does happen, naturally our mortgage rates in Singapore is going to adjust accordingly as well, because we peg our rates very closely to the US federal funds rate. And if that happens, what do you think is going to happen to our property prices? Naturally, developers, existing homeowners that intend to sell, they will not sell low. They will definitely raise their asking prices because they now know that buyers have more buying power. And of course, there's a lot of couple of articles that you can search online that a lot of people are expecting rates to come down in 2024. And that means that it might happen in the next 12 months. And thus, it will also mean that if somebody is waiting at the sidelines now, and you already know that rates are going to come down in 12 months time, then if rates are going to come in 12 months down and prices are going to start going upwards in terms of sellers' expectation, then does it make sense to continue to wait out until next year to purchase next year? Why don't you start analyzing and hunting a little bit more seriously this year? Because something to note is that there will be 2 things that will happen. Number 1, even if let's say we were to buy a property this year, we buy at 4% interest rate. This is not going to be forever. Interest rates fluctuate and change year-on-year basis. Last time we used to be enjoying 1.2%, 1.5%, and then suddenly it just shot up to 2%, 3%, and 4% in 2022. Right now in 2023 is averagely at about 4%. And as long as you just take a non-lock-in package, you are free to refinance next year if let's say rates come down to 3%. And you can refinance at 3% for another 1 year. And then when rates come down further, hopefully to 2.5% or 2%, you can then refinance again. It is not a forever thing. And note that mortgage interest rate does change. So there's flexibility involved. However, if let's say price were to appreciate by let's say 10% next year, and you buy a property at let's say another $300,000 in terms of total price quantum, because maybe you can buy something at 2 million now, but you have to buy at 2.3 million next year. And even though you buy at 2.3 million at 3% interest rate compared to 2 million at 4% interest rate, it's still more worth it to buy now because you can refinance your package later on. Trend number 7, and lastly, this is the final trend before we end our session, is that if Fed were to reduce their interest rates in 2024 and then our mortgage rates come down, when mortgage rates go down, something will happen is that buyers' demand will come back because buyers will have now more buying power. And if they know that rates are going down, naturally you and I, if let's say I'm hunting for a property, I'll be more excited to buy a property because interest rates are down. And I want to secure a property ASAP before sellers increase their price even more. When demand and transaction volume surge, and if that were to happen next year, what do you think will happen to our property prices? Property prices might start to go up at a faster rate, and then that might mean that our government might have to step in more with more cooling measures. And if more cooling measures come in, if our government is going to do more structural change to TDSR or increase ABSD further, I think it would then be harder and harder to buy a property. And then if you look at this, we already had 13 to 14 rounds. There's so many cooling measures built into the market, and this is what is happening. Then why should we buy a property when there are more cooling measures later? Why shouldn't we buy a property and take a little bit more analysis and action now? So last but not least, I want to end off with this article for this episode is that a lot of investors, high net worth, ultra high net worth, are aiming for Singapore properties because this is not just a place to park wealth. And if you look at this article, the article is very interesting because even though wealthy foreigners are gaining less from buying property in Singapore, that is actually not their core objective. Their core objective is to park their wealth here to make their wealth safe because Singapore is a safe haven. So I will end with this article for you, and I hope they enjoy Nuggets on the Go Season 3 in 2023 Episode 2. I'll see you on episode number 3, where I'm going to talk about rental rates as well as the differences between buying and renting. All right, see you soon. Cheers. Okay.